Hello everyone, welcome back to Chill Deal Trades, the most accurate stock market channel on YouTube. Today we're doing an update video on Root Insurance because they just had earnings. So we're going to cover earnings, figure out the pros and cons of what was communicated, and then going into the charts to figure out where the price could be headed from here. If you're here and you haven't hit the sub button, please do that. This is a stock, if you want to cover this, we make videos on constantly. So join the community, join the squad. Okay, so we know Root jumped significantly off earnings. I think it peaked around $6.50 today. And at first, let's just go over the basics. So when we look at, they beat on both earnings per share and revenue. So 19% surprise on EPS. And we've kind of talked about this in the last video. I mean, our last video was perfectly correct. We said that they're going to drop their marketing expenses significantly, which is going to increase their EPS a little bit, but more importantly, decrease their loss, their net loss in dollars, because the more money you're losing in dollars, the more of your cash reserves you have to eat up. So we're starting to see a trend there. I would say also very important is that we saw 93 million in revenue this quarter. That's really big because when we actually go back and we'll look at it on the earnings statement, is that this beat 2019, or I think it beat 2019 and 2020 result, if I remember correctly. But we'll get into details on that. So overarching, that's a really big positive, but there are still some negatives we need to be on the lookout for. Okay, so actually first, I want to talk about the Carvana partnership. So we talked about that this could be a very big, actually two things I want to talk about, Carvana and the reduction in marketing expenses. So first is we didn't really get much insight on the impact of Carvana yet. This is all they've said, is they said exclusive partnership, they're fully integrated point of sale offering. So that part's really important because I don't know if you've ever been on Carvana, but it's fully automated experience. So you buy a car, and what would be really positive is what it sounds like they're doing is you buy a car, and then as you're exiting the process, you can really quickly sign up for Root Insurance. And so having that full built-in integration is really important. And Carvana really has an incentive to build it out because now they own a part. They basically bought into Root Insurance as a company. And so that's really important. And we talked about they could potentially be an acquisition for Carvana, maybe. But so that's positive. They're currently in 12 states. So first iteration, 12 states, not a whole lot of states. So I'm assuming they don't have too much revenue from it yet. But they said early signs are positive as we look forward to additional details in the months ahead. So what I would say is if it was killer right now, they would share numbers with us. So what this is telling me is they don't really have a lot of details of how successful this is yet. That's what I'm getting from this, from what he's saying here. He's being very political about it. They don't know how well it's going to work yet because the sample size is so small. But what they did say is that we are getting positives. Was it on here? Maybe it was on another part, but they are hearing positive feedback from customers who are buying cars and potentially signing up for the service. So that's a positive. Second thing I want to talk about is the decrease in expenses. So on their last quarter earnings, they said that they are going to cut back marketing costs a lot. And I said this was really important for the business. I work in digital marketing because I always got ads and I have yet to sign up for Root Insurance. Just hasn't made sense for me yet, but I will on my next vehicle. But yeah, I just don't think their digital marketing was very effective in how they were doing. So reducing that by 40%, and that's what's really helped decrease their net loss. Being able to see revenue increase at the level it did, or beating expectations at the level it did, but seeing those expenses decrease is a step in the right direction. We still are going to have, I think, $550 million loss this year, which is not a good thing because I think that's more than full year revenue. But this is a step in the right direction. Right here, he said 45 million improvement to operating loss. So that's really positive. So let's go ahead and get to the numbers now. So let me see if I can zoom in here. Okay, let's zoom in one more. Okay, so the main thing I want to call out is cash. So cash is so important for this business because they're burning so much of it. They're spending still so much to make their revenue that they really need a lot of cash. So saying that they have 800,000 or 800 million in cash is a big pro. That's a big win, because that means they can keep burning 50 million a quarter or something and still have enough to get them out of hopefully this really big cash burn phase as we hopefully transition into more of a net positive phase as hopefully revenue continues to grow. So I would say that's the main call out here. That's a really big positive. We're not going to break down liabilities and such. It's just too much detail. They do see their net premium earnings rise versus 2020, and we're still under 2020 total up to this point. So that's not a great sign, but we'll have to see how Q4 looks, as we are seeing some positive momentum. Here we have sales and marketing. As you can see, year over year, that's the wrong one. Here it is. Year over year, 65 versus 36. So it looks like we're still seeing an increase, but it is a large reduction, because as we can see for the full 9 months, 245 versus 90. So they're reducing how much they're spending. They're still spending more than 2020, but they're spending much less, which is a pro. That's the main thing I want to call out there, because I really want to get to revenue and net loss. So far for the year, they've lost 400 million. This is where the business is still going to have a struggle. They're still burning a lot of money. They're burning more than they're making. And that's the main issue with this business. If I really sum up the earnings in one word, it wasn't as bad as we expected. They had some beats, and it's potentially positive momentum. But one quarter doesn't really tell us that much. But that's the main thing, is we're still losing a lot of money. Let's go down. Don't care about that. Okay, so total revenue, 93 versus 2019. This is a big win, because we know 2020 was a down year, but being able to beat 2019 is a really big win. We saw 100, I think it's 100 million loss, and only see 114. So not a huge increase with this additional revenue. That's a positive. It's still not a good thing that we're seeing losses increase substantially still with a little bit of growth in revenue, but it could be worse. I think they're making some positive steps in the right direction. There's so many financial statements here. Here we go. This is what I wanted. So far, total revenue 252. So we're beating 2019, but we're still under 2020. So that's the con. What I'm hoping for is that this next quarter that comes in for Q4 is that pushes us up 2020 revenue. Because if that does, that's most likely going to tell us that we have positive momentum heading into 2022 as the economy's open back up. People have just bought a bunch of new cars. Hopefully, a lot more people are on their network and they're making more money from it. Another really big positive is gross profit loss. So when we go to 2019, we're significantly lower, which is a really big win. Obviously, we made less, but having this decrease is a really big positive. 2020, we're having much higher so far, but hopefully, like I said, in Q4, we do see a bump in revenue. I think that's all I wanted to cover on there, because the last part of the video, last 7 minutes, what I want to cover is technicals, because that's important. So let's zoom in here. Actually, let's zoom out first. So long picture, there's a couple really big pros here. So in this kind of sideways accumulation that we've had down here, it's so small you can't see it, but the sideways accumulation, we were able to break out, not that one, we were able to break out of this long-term downtrend from back in January. So this is something that we kept hitting and breaking down, but we're finally above. And so that's what we're going to we'll break down a little bit, that we need to see it follow through and stay above that, but we'll come down to that in a second. The con is that we're still below this more long-term trend line, and it's up at like $10 is where that would be if we zoom in. So we're still below that. In the short term, we're probably not going to get there, but if we see a positive pattern, we could break out of that, and that could show some positive momentum for the stock. So the first thing I want to call out is, as I mentioned a second ago, is we've broken out of this sideways action on this news for earnings. So that's a really big positive. What I really want to see happen is that I would say my line in the sand is 540. So 540 is right here. And that's where I really want to stay above. I really want to stay above this range. If we can't stay above 540, then this was most likely just a short squeeze because we know there's a really high short float on this stock. And it was just an overreaction to people thought it was going to be really bad and it wasn't as bad as they thought, and it actually beat. And so that's really what we're going to want to pay attention to, because also when we look at RSI is over 50. We haven't been over 50 in a really long time besides this little bump that came back and failed. So kind of like this came right back down. That's not what we want to see. We want to see RSI come up and we want to see it flirt around this 50 and stay above. So that's something to look out on the RSI. So looking for that pattern RSI, and then second, this 540 range is really what we want to stay above. That's really the line in the sand for me personally. If we're able to hold that, I would really, in the best case scenario, like to stay above 560 in the best case scenario, because when we really look at this, when we zoom out, it's really this range that we've been stuck in. And so if we can stick out of this range and stay above it, we could potentially start seeing, some kind of an upward pattern form. It maybe not be that long, but something like this, so that we start to bounce off. It might be a little bit higher than that, more like this. We could see this start to actually create an uptrend, which we haven't seen very often. We saw a short uptrend, but it failed. And so if we get an uptrend here and we're able to break above these long-term downtrend lines, then that's a really big positive, saying we found a bottom and the stock is ready to recover. So we have the 50 moving averages at 540, which is right above this zone I said. So if personally for me, if this stock comes back to 540 and it holds, that's probably where I'll be buying tomorrow. I know after hours is up a little bit, but 540 is really that price I'm looking for. We're going to start seeing the 20-day moving average start to accelerate significantly. So right now it's down here at $5.10. Because of the big move higher, we're going to start seeing these accelerate, and I want to see them start catching up to the 50-day moving average. If these are able to start catching up to the 50-day moving average, they'll hopefully meet somewhere around 540 to 560, and that will create a really big support for the stock. And if it can hold the 20-day, if it can hold the 50-day, and hold above what we're calling is this consolidation zone from the past, those are all really big bullish indicators, and we'll also see this uptrend. So those are kind of things that you want to keep an eye on if you don't own yet, and if you're maybe wanting to buy more shares at this point off this big move, those are the price points you're going to want to look at. If we dive in, let's go to the 4-hour just to see a little bit more intricacies here. So beside the zone I want it to hold, if we do hold that, the main resistance points we want to look at is the first one is at about $6. So let's zoom out just a little bit. We see we have, I think we're above this price, so 580. So let's first do supports. 580, 560, 540. Those are the three. And you can kind of use 540 as your base for that. But in terms of resistance, we do have a big resistance around $6. As you can kind of see, that's where we opened and we came down from there. We opened, we went up, and then we came down. And so we opened at that big resistance point and was able to poke up to this next resistance point. So we have $6 is a place that we're going to need to break through if it continues up. And then we're eventually obviously going to have to break above this last wick at 650. If in a perfect world, what I would like it to do is maybe hang around there, come back a little bit around this 540 to 560 range, and then create that uptrend like this. And so these are the first two resistance points at 650. And then from there we have a really big resistance range around $7, I would say to 730. And that's going to be really important because when we look at big picture, the stock really hasn't been able to get above that price since, when was that? Back in August. So that's quite a few months that it's been down below and trending downwards. And so if we can kind of see some consolidation, start seeing an uptrend, and we get above that $7, that's a really big win. And that means that you probably bought at a good price below that $7. So those are just some short-term price actions to take a look at. We'll continue to do updates on this stock. But I hope you made some money on this, and hopefully if it does hold that 540 range, you can buy in and make it a long-term hold like everybody on this channel does. See you next time.